What's going on YouTube? This is Dave's Daily Trades, where I bring you daily AMC technical analysis, price predictions, and of course the latest and greatest news. If you could be so kind enough to hit that like button and subscribe, I would be greatly appreciative. All right, enough of that and into the chart. So I do have the 1 minute chart up for today. Just wanted to take a quick look into this. So of course we did have a rough start to the morning where we dropped to a low of $51.07. Then for the rest of the day, we did have this resistance line here at, just call it $55, where we tested not once, not twice, but yes, 3 times before breaking out. And of course, once we did break out, we never retested back. We just went straight up for the rest of the day. Really the biggest thing that I was looking at this chart was A, yes, of course, that resistance line that we kept on testing. And then B, guys, we had a very strong close for today. Of course, after hours, we are down, what, 0.25%. But guys, I always take after hours with a grain of salt. Really does not mean too much to me. Also, as you guys are going to notice down here on the RSI, look at that. We did not actually see oversold territory much today. We literally saw it, of course, in the morning because that was a nasty sell-off. But of course, just a few times we did touch that $30 range, but nothing besides for that. So I love to see that. We were definitely very bullish for today, and the chart shows it. As for consolidation, there wasn't really anything too crazy. I'll say, maybe a half hour over here. We had maybe a half hour over here, right around 12:30. But for the rest of the day, we were just climbing up, trading sideways, climbing up, trading sideways, up, sideways, and then finish the day near the all-time high of today. So that's great to see. Anyways, we're going to take a look at the 1 hour chart. Of course, I know a lot of you folks have been tracking that wedge pattern that we've been seeing. And of course, today we actually really kind of respected this. So of course, we didn't come down and quite touch this area, but we did find support right around that $50 level. So that was definitely good to see. That nasty sell-off, hopefully it didn't spook you guys because that was nothing. That was literally nothing, guys. But on the 1 hour chart, this is looking really, really good. And for AMC, really, it's been the 4-touch story on this top red line that I have drawn. We did have 1 touch here on June 2nd. We had a touch point here, and you could almost argue that that was 2, but that was on June 18th. And it looks like probably tomorrow we're going to retest somewhere around $62.50. And that would be test point 3. So I believe that, yes, tomorrow is going to be the 24th. We will touch that high on that wedge here. And then we might hit down this $50 range one last time, which really has been strong for us. I think that is a high possibility before we absolutely skyrocket out. So I'm going to say price predictions for tomorrow. We're definitely going to hit a high of somewhere about 62.50. Trade sideways, and then for the rest of the week, it may be somewhat flat until we can break out of this. All right, so I guess we'll see. Definitely tune in for the next videos, see if I'm right on this. Anyways, looking at the technicals down here, MACD looking great. It did have that crossover on the 1 hour chart, and RSI is back in that $50 range, so I'm definitely bullish for tomorrow. Definitely think that we're going to get back into the 60s, and things are going to get quite interesting. All right, so on the day chart, we'll just take a quick look at this, guys. Really, I love the 1 hour chart. That's my favorite metric to look at for any type of trades that I'm in. But for the day, guys, same picture, still consolidating in this wedge pattern. Of course, I always say this, but take the technicals, MACD, RSI with a grain of salt. This only tracks the candlesticks, not what's actually going on behind the scenes. Anyways, guys, enough of the chart. Now into the latest and greatest piece of information that I have found. So of course, NSCC-002 was just passed on Monday, midday, and it is going into effect on Wednesday, which is relatively quick for a new regulation to be put in place. Anyways, guys, I found this really, really interesting article on Superstock. Of course, they mostly talk about GameStop on that, but here I'm going to take this GameStop language, dumb it the hell down, and then of course have it relate to AMC, which it absolutely does. Since these two stocks, obviously they're not the same, but they trade and have the same metrics as each other. Anyways, so we'll jump right into this. So of course, as you guys know, I've really been following that T plus 21 and T plus 35 cycle, and that's been playing out really, really good for my option contracts. What I've typically been doing is 2 days or 3 days before, when we do see those red days, I'll get into an options contract. Of course, always calls, never puts. Do not do puts with AMC. You will get burned. Don't be like the others. Anyway, so I'll take call options 2 to 3 days before that T plus 21. Wait a few days, wait for a spike up, sell those options, rinse and repeat. And that's been working out pretty good. Of course, it's not going to always work, guys, because nothing always works. But it is a decent option strategy for AMC. And of course, GME as well. So as we all know, this new rule was put into a place, and it'll be live Wednesday, June 23rd. Anyways, as we come down here, I really just want to take a look at what this is, what it's going to do, and all of that fun stuff. So typically what they were doing is you'd have to meet liquidity deposits at the end of the month. Now this is changing to each business day. And this is pretty much calculated with a system saying, all right, what's your risk requirement? This is the liquidity you need to meet for this position. If you are not going to forefront that liquidity, then you will be margin called and liquidated within the hour, which is absolutely insane. So prior to this rule change, the NSCC would collect liquidity deposits only during monthly option expiry periods. So what are these? What do they mean? So it is usually the third Friday of each month. So of course that was the once a month time frame that they're doing. Now they're doing it each business day. So as you guys can see here, these were the dates for the monthly liquidity requirements. Sorry guys, I can't talk today. I guess it's Taco Tuesday doing me dirty here. Anyways, all right, so what's changing down here? The NSCC realized that shit could get really wonky because those liquidity periods of the monthly options, these volatile movements in the markets would put the NSC itself at risk due to some of the members' positions. So of course, guys, the thing is, the NSCC, sure, for all we know, could be very clean, not taking ridiculously risky bets on the market. So they want to make sure that this rule's in place to really cover their ass. And of course, all the other members that are in here who aren't shorting AMC or GameStop. Because guys, when one of these hedge funds goes down, since they're all part of that NSCC, they all fall down together. So these rules and regulations that have been put in by various regulatory bodies, they're doing this to protect themselves and the members. I know a lot of people are going to say it doesn't mean anything until it's passed, until it's enforced. And of course, enforcing it is a different story. But for this rule itself, I believe because they're saying if you don't meet liquidity requirements within the hour, you are literally forced liquidated or margin called. I really think this is going to have such a significant effect going forward. And this article definitely just scrapes the surface of this importancy. Anyways, guys, so of course, like we said, there was, for those dates above here, January 15th, February 19th, so on and so forth, 2 days prior to that, you needed to meet that liquidity requirement. So as we go down here, we can see, all right, March 10th was one of those dates. If we scroll up, I'll just confirm that. Sorry, March 19th. I don't know what I'm saying here, guys. Sorry. Bear with me for today. So March 19th, over here, what do we see? We see a big spike, and then we see that downward trading. And this right here, this is definitely the most important chart that we're going to see. So this pretty much just explains this. We're going to call it the death spiral, as they say it. So this, of course, is all for GME, but guys, take that with a grain of salt because this is 100% relating to AMC as well. Anyways, they used to have post liquidity 2 days prior to the monthly options. So all of those different dates that I did scroll up above, 2 days before, you have to meet that liquidity requirement. Anyways, but now the NSC has asked for more liquidity at any time based on daily movements of prices. The previous liquidity posting was one and done deal. So once a month, you post that liquidity requirement, you are good. Now, we're doing this shit every single day, they say. All right. And then what happens if you don't meet it? 1 hour, you're margin called, you're out. So this chart right here, I'll actually open this up in a different tab so we can take a better look at it. Just goes through that 2 days prior, and then of course the next 7 days. Oh, I don't know why it opened twice. My MacBook is getting old on me. Anyways, guys, this is literally picture perfect here. April 16th, look at, we see that. We see this trading sideways, bang, shoot up. What do we see in here? Of course, it's a cycle. This is literally almost the same all around the board. And of course, guys, feel free to pause the video here, take a look at this, read all this writing up here. Definitely goes a little bit more in depth than I'm going to go for this video. Really, the purpose of this video is just to get this information out there. So definitely share this out to any of your AMC friends, people who are asking if they should get in AMC. This is just more information to just show that I'm extremely bullish, the community's extremely bullish, and so on and so forth. All right. So this could be very much why they're trying to obliterate the price at the moment. The next FTD spike can cause the price to absurdly soar in a price range which requires more liquidity, making it harder for them to suppress the price and pushing AMC and GME more towards the margin call price. So of course, guys, they can absolutely keep on playing this game, but as you guys can tell, it's a losing battle. Of course, this is GameStop right here, and we're just going to flip-flop back over to AMC. Sure, guys, they could absolutely meet their liquidity requirements when we were at, what, $5 over here, $10 over here, sure. But now we're trading upwards of, call it $60 just to make it even. They can't suppress the price. They can't drop it as much as they have been. That's A. B, guys, we're literally a couple more FTD spikes away from us being in the $100 range. And once that happens, guys, the liquidity requirements on these positions are going to go absolutely through the roof. And yes, not everyone is going to be margin called at that point, but a lot of those, we're going to call them little fish in the sea, the tiny hedge funds who are short on AMC and GME, they're going to be margin called because they do not have the assets under management to actually possess and to give up all the money to meet this requirement. They're going to be margin called. And what happens? All of those short positions are covered, price spikes up. Now, guess what? The next guy, he's not going to be able to meet those margin requirements. And so on, so forth. It's a domino effect that just keeps on happening. All right, back to the article here, guys. Anyways, as you guys know, 002 was really an urgent push that came up. And this piece of the article right here was really, really interesting. It's talking about the end of the quarter, which of course is June 30th. And Biden, Powell, Yellen, Gensler, they all had a meeting. This is something that actually happened in the 2008 financial crisis, which we're going to dig into a little bit later. And that's where things get super interesting. Actually, never mind. We are right here in the article. All right, so the 2008 crash started around the end of Q3 with the collapse of Lehman Bros on September 15, 2008. Here we are here. End of quarters are when the system gets really strained due to the underlying plummeting of the markets and the necessity to pump balance sheets. So guys, at the end of the quarter, you got to pump those balance sheets. That's huge. That is absolutely huge. And this is just linked over here. We're not going to jump into this, but banks' reporting dates are known inflection points in the short-term funding markets and typically fall at the end of the month, quarter, and of course the year. But periodically, the 15th of the month is also a pressure point. All right, so we're going to fast forward now to when the Fed attempted to reverse quantitative easing. That is QE in this article here. A year after performing QT, which is the reverse of quantitative easing, QT is quantitative tightening. I know a lot of quantitative jumping around here. The repo market blew up to 10% interest on September 15, 2019 due to way too many loans that had to be handled. You can see how the strain on the market starts to amplify around particular dates of quarter ends and occasionally the 15th of months. And guys, I did go through the S&P 500 and this is absolutely confirmed. So I am backing that part right there. We're approaching the end of Q2, which is June 30th. Quarter end. Of course, this sounds familiar to what exactly happened here. The NSCC-002 and of course 801 is having accelerated effectiveness. This is huge urgency to get this passed for margin requirements and margin calling members. Why would they be pushing this out to get it out the door? Guys, typically with all of these other rules and regulations, it is it gets backed up, 90 days for edits and changes to be made, where obviously nothing really happens there besides a few tweaks here and there. And then weeks of it actually being adopted into the system, making sure it's going to be okay and all of that bull crap. So now, guys, this was passed, 002 was passed Monday. Literally within 2 days, it is going to affect. And literally tomorrow is the first day it's going to be live. Of course, this does not mean that tomorrow we're going to skyrocket to $1,000. No. But I think this is really the start of the beginning here, where things are absolutely going to get interesting and where margin calls could literally happen at any second. Anyways, guys, enough of all this stuff. This is just super, super interesting, and I am absolutely incredibly bullish on AMC right now. The biggest thing, guys, it's not going to happen tomorrow, might not happen the next day, might happen for another week, months, who knows. But at any point, this thing could go absolutely crazy. So my advice to you, set a price target on Webull right now, and you can just hit a little alert button where you get alerted when AMC hits $100, $500, $1,000. Set those alerts. Don't look at your phone. Don't worry about it. Just believe and have fun. All right, guys, that's really everything I'm going to cover for today. If you're still with me, thank you so much for watching this to the end. You're absolutely a true ape. If you like this video, hit that thumbs up button, subscribe for more content, and I'll catch you guys on the next one.